Our next presenter is Dave Cole, President and CEO of EMX Royalty. They are a precious and base metal royalty company with a long-standing track record of success in exploration, discovery, royalty generation, royalty acquisition, and strategic investments. Can I welcome Dave Cole back on the stage? Dave.
Thanks, John. Cheers. Yeah. Now that you guys all know what phenomenal financial instruments royalties are, I can skip right through and start to tell you about the portfolio. We've been building this portfolio through execution of the royalty generation business model, as well as buying existing royalties, as well as making strategic investments, which are the sideline of our business that's netted out $55 million in profits over the course of the last 20 years, which we've reinvested back into purchasing royalties and executing royalty generation. To put together this map, we touch nearly 5 million acres of mineral rights worldwide. We have 170 and growing royalties in the world, over 200 mineral property positions. I'm going to touch upon those which are significant value drivers within the portfolio here briefly. I'll point out that we touch 12,000 mining claims in the western United States. Very importantly, the Leeville mine, where we have a 1% royalty, that's operated by Barrick as the operator of the joint venture with Newmont at Nevada Gold Mines on the Carlin Trend. That royalty's paid, getting close to $25 million now since we owned it, and is paying going on $3.5 million a year right now. Very pleased to have that. And you heard me talk about the importance of discovery optionality and the importance of optionality with respect to royalty valuations in general. I'll make the point that very nice discovery ongoing in Arizona on our property by South 32, the Peak discovery, which is the lateral extension of the Taylor deposit in Arizona, where it's going from a lead zinc silver system to a copper zinc silver system. Is a great example of discovery optionality in North America. A growing portfolio in central and eastern Canada as well. And then we go to South America, where we have some nice discoveries being made on our properties there, but very importantly, Caserones, which is our largest cash flowing royalty within the portfolio, last year paid $10.4 million to us. And that is now operated by Lundin Mining Corporation. That we think that they're an excellent operator, and they're putting a lot of money into exploration. I'm going to go into some slides here in a minute to specifically go into some of the details of Caserones. Then we go over to Europe. In Northern Europe, Fennoscandia, Norway, Finland, and Sweden. EMX is the largest mineral rights holder in that part of the world. Many licenses there have been sold off to companies where we maintain royalty positions, and our next production cash flowing royalty will likely be the Viscaria mine, which is the copper and gold portion of the iron oxide copper gold district in Kiruna of northern Sweden. That's the world's largest underground iron mining complex, and we're delighted to have that mine being advanced by Copperstone. Then moving to the Tethyan metallogenic belt that transects through Serbia and Turkey and on. Here is probably our most valuable royalty in the portfolio long-term, Timok, operated by Zijin in the Timok magmatic complex of Serbia. And I've got some key slides on that one, so I'll fill you in on that in a minute. Balya is a lead zinc silver discovery that we participated in. It was a generated assets paying about $1 million a year. Gedek Tepe is a nice oxide gold silver zone that's paying $4 or $5 million a year right now from the oxide zone, and we'll have a 2% royalty when they get to the sulfide zone here in a few years as well. So let's go through and talk quite importantly about our top line revenues. If you've listened to me speak before, you've heard me say that we will become a cash cow as these various aspects of optionality within the portfolio are coming up towards the top of the pyramid, and these things become cash flow. I'm happy to stand here today and say, it's not forthcoming. It has happened. And last year we set a record with $37 million coming in the front door, and we're quite pleased that that's diversified across a number of key performing assets and across copper, gold, as well as other metals. And we're very, very pleased to be in a position where we have strong positive cash flows across this portfolio. It is very nice to see the model working and coming to fruition and being in that position today. We have given guidance into next year, and as of the last quarter, we're near the top end of our guidance with GEOs predicted to 11,000 to 14,000 for the year. Adjusted royalty revenues 22 to 27. In addition to that, one nice thing about our business model, the way we have designed it, is there's a lot of pre-production payments, advanced royalty income flow, lease payments, et cetera, stage gate payments that contribute to our income. And last year, for example, 15% of the money coming in the front door were property agreement payments. This year, we're expecting that to be in the 2 to 3 range. So there are two very significant, very long-lived copper assets in the portfolio that I want to go in and specifically highlight. One, Caserones, where we have a 0.8306% royalty. This is one operated by Lundin, paid $10.4 million last year. We have a huge royalty footprint here, immense discovery optionality. This asset is worth substantially more than we paid for it. We paid about $64 million total for that royalty. The street would value this at a NAV that's closer to or slightly above 100 million. Very good investment and represents a key cash flowing asset. That's copper and molybdenum in Chile. The next one I'll point out is probably our most valuable royalty in the portfolio, and that's Timok, where we have a 0.3625% royalty on the portion of the deposit that's known today. We have other royalties in that district. This royalty's paid already about $10 million. I want to point out that I purchased that royalty many years ago, understanding the geological potential of this region, for 200,000 Canadian dollars. It's already paid nearly 10 million US, and there's $500 million more dollars worth of our metal in that deposit that'll be forthcoming to us over the course of the decades in the future, and I'll go into some detail and explain that to you. That's in addition to Gediktepe, that's paying, last few months, it's been paying $1 million a month. Leeville, which has paid $25 million in gold from Nevada. Balya, lead, zinc, silver systems, only paying about $1 million a year, but it's got some good potential to increase its production over time. But I want to get into the meat of this one right here. This is the Cukurupeki mine, also called the Timok project, in the Tethyan metallogenic belt and the Timok magmatic complex of Serbia, which is the largest historic copper and gold producing region in Europe. And this deposit is the largest copper and gold deposit found and developed in the history of Europe, and one of the larger copper gold development stories in the world today. I'll point out that we have 3 licenses here with royalties on them. The 2 green ones have that 0.3625% royalty, and I'll point out that that's on all mineral production in perpetuity. And then on that magenta license, we have a 2% royalty on gold and silver and 1% on all other metals, once again, on all mineral production in perpetuity. And if you see the goldenrod blob there on the green license in the central portion of this figure, that is the outline of the lower zone, which is the big copper gold porphyry system. It is in development right now. They are now producing from one of the 2 upper zones shown in the turquoise color, and that is currently paying us, last year it paid just under $4 million. Last quarter it paid us $1.25 million. Thus far, each quarter the payment here has gone up. And I would like to point out that they're producing from the upper, smaller zones, whilst they're developing the lower zone, and Zijin specifically announced a $3.8 billion capital expenditure to advance the lower zone. I'd like to show you a cross-section, looking north and going east-west through these zones. And please note the boundary between the royalty that is 2% on gold and silver and 1% on everything else, as opposed to the royalty, which is 0.3625%. And all of the mineralization to date is on that 0.3625% ground, but it is completely open-ended at its thickest and highest grade portion of the deposit, which bodes extremely well for increase of the resource here towards that 2% line. The resource right now, according to Zijin's website, is right about 2.5 billion tons in the lower zone at 0.76% copper, 0.16 grams per ton gold. If you do the calculations on that, that comes up to at about $4 per pound copper and $2,000 gold. That comes up to close to $500 million cumulative payout at today's metal price after taking into account metallurgical loss and smelter fees. So this is an immense amount of metal that's coming to EMX decades into the future as this is developed, and that's not taking into account any discovery optionality or commodity price optionality. This royalty has the potential to be flat out a company maker. You heard me mention the Gold Strike royalty that made Franco-Nevada and what an amazing investment that was for them. This is akin, this is our Gold Strike right here. It's a truly phenomenal asset. And if and when the mineralization comes over that 2%, 1% line, the effective royalty rate given the copper gold ratio will effectively triple, and it could absolutely blow up the valuation even further. This is a GIF that is on the Xinjiang website, and you can see that there's absolutely no drill data defining the base of the system. It's utterly and completely open-ended at depth at its thickest and highest grade portion. And as part of that $3.8 billion capital expenditure that I mentioned, Xinjiang said that they will drill this to 3 kilometers of depth. And importantly, the lower zone is being developed with block cave technology, which means that they will go right to the highest and thickest grade portion first and mine from the bottom up is the way block caving works. Each block cave cell from a system of this nature would typically produce 125,000 tons per day. And we have been on site, we've been underground. I'd like to point out that the foundation is already being poured for the mill to host the ores that are coming from underground. So this is not a maybe someday, this is happening. And I'll point out once again that in 21 this paid 1.6, in 22 it paid 3.2, in 23 it paid $3.8 million. Last quarter paid 1.25. There's the GIF, and you can see it rotating, you can see the drill holes, and you can see that there's an utter paucity of drill holes defining the base of this system. Okay, let's go on, move on to another company maker within the portfolio where we have a 0.8306% royalty. This one's in Chile, this one's copper and molybdenum. 886 million ton reserve, another 186 million tons of resource, but Lundin's being aggressive in exploration, and they've given guidance to their shoulders that they believe that these numbers are going to increase. Already paid us $10 million last year. We're on track for that to be a similar number this year. But I want to point out something very important here. Our royalty footprint, shown in yellow, the yellow box, is vastly larger than just the Caserones mine. We have a royalty that extends from just north of the world-class Los Helados discovery all the way through Caserones and beyond. Importantly, Lundin has said that in this calendar year they'll invest $14.7 million in exploration, testing targets within our royalty footprint. The highest priority target that they have delineated is the deep sulfide mineralization and high-grade breccias that have been discovered in the Caserones mine itself. So that's in-pit drilling, expanding that mineralization further at depth. And then the new discovery of sulfide porphyry-related mineralization at the Angelica deposit immediately southeast of the Caserones deposit. So this bodes incredibly well for the long-term valuation of this royalty, and this one's copper and molybdenum. The molybdenum credit here has been paying very nicely. Molybdenum prices have done quite well lately. So I like to talk about deep portfolio discovery optionality, and it's going on across our portfolio. I could stand up here for an hour or more talking about it, but I'll just highlight this one in particular. The Peak discovery by South 32, which is a lateral extension of the Hermosa deposit, where they're ripping off world-class copper, zinc, silver intercepts within our royalty footprint. Our royalty footprint here is the white box, and I've highlighted one in particular intercept, 139 meters of 1.88% copper with a little bit of lead, a little bit of zinc, and 52 grams per ton silver. That's emblematic of a number of intercepts that they have within this zone, and they have highlighted this to their investors. We just love it when discoveries are being made on our assets at no cost to us, and that's why you want to own royalties. It's just another example. Strong shareholder support. I'm very, very proud of the fact that we're the only junior royalty company Franco-Nevada owns stock in. And if you ask Paul Brink why they bought stock in our company, and he's told me I'm allowed to tell you, that's because they appreciate our royalty generation business model. And they know that does not compete with them. They know that we see a different type of deal flow than they do, and we're delighted to have them as a shareholder. That also on the list, Newmont Mining Corporation, Euro Pacific, that's Adrian Day. Extract Capital is a new position here. 125 million shares issued and outstanding, 34 million in debt. We can manage that quite nicely. We're on solid footing. Thank you very much.
Cheers.
Thanks, John.